Hi everyone, thank you so much for joining us today. My name's Sarah Manhinnick. I'm the Head of Issuer Relationships here at NZX. And this is the first of our digital retail investor series. Traditionally, we've always done these in person to give people the opportunity to interact with various companies that are listed on the exchange, but with everything that's been happening in the world, we've decided it's really time to pivot to digital. And this will be an ongoing series. We'll have 2 or 3 companies a month, so we really hope that you'll join us on an ongoing basis. So today we have 3 speakers. The first is Amir Ghandar, who is from CAA NZ. He will be talking about engaging with chartered accountants and stakeholders to help people in terms of their policy discussions. He will be followed by Richard Rookes, who is the CEO of MHM Automation, previously known as Mercer Group, and then Richard will be followed by David Mair from Skellerup Holdings, where he is the CEO. We will have an opportunity at the end of each of the 3 presenters to ask questions. So as they're presenting, if questions do come up, please put them in the chat, which is in the bottom of your individual panel, and we'll do our best to get through all of those. To the extent that we're constrained by time, we will give you an opportunity to follow up with those directly. So don't worry if your question doesn't get answered. And yes, we hope that you enjoy the session and that you'll continue to join on an ongoing basis as we do these month by month. So all of that being said, we'll pass over to Amir for his presentation.
Thanks very much. Let me see if I can bring my my slides up. So that should be up now. Look, thanks for having me firstly, and for that introduction. What I'm going to focus on today is a quick whistle-stop tour through the auditor's report, with a focus on where investors might look to get some hints about companies and the financial statements. I can certainly talk more broadly than that if we have questions. Another day, I could talk about the financial statements overall, but really the first place that you would want to look when you pick up your financial statements is the auditor's report, and that's because it's going to give you insights on the veracity of those financial statements, whether you can rely on the financial statements overall to make assessments about the companies that you're investing in or thinking to invest in. Now, it's an important distinction that the auditor's report is not specifically talking about the company itself. It's not telling you whether that company is well run or poorly run, or whether the company is a sure thing or it's going to collapse tomorrow. But there are places you can look in the auditor's report to get some hints about those types of things, and so I'm going to touch on that a little bit today. Now, in the COVID-19 world that we find ourselves in, auditing has become significantly more challenging. But at the same time, that job that auditors are doing to make sure that you can rely on the financial statements becomes more and more important for a few reasons. I mean, earlier on, as the pandemic hit, even the physical distancing challenges were a huge hurdle for auditors. You can imagine being able to get out and to attend stock counts in some companies. Another challenge, which is going to continue, and it's probably the main one now, is the uncertainty that uncertain economic times bring to all of the estimates in the financial statements. And here's another, I guess, sort of side tip as to why the auditor's report is so important. If you think about financial statements in 2020, really most of the things that you're seeing on the balance sheet are estimated. They're looking at the valuation of assets or assessing the likely sort of expiry around a liability, whether that's a current or a non-current liability. So many estimates and so much uncertainty around the economics of those estimates. And so having that independent auditor come in and evaluate and bring their opinion into the mix is more important than really it's ever been. So what I'm going to touch on briefly today are just sort of walking through the key parts of the auditor report, any auditor's report that you look at, and some of the things that you're more likely to see in a pandemic. So firstly, the auditor's opinion, and this is the first thing you're likely to see at the top of an auditor's report. And the different types of opinion are firstly an unqualified opinion, and that's where the auditor is generally giving a tick that, you know, in their view, materially the financial statements are reliable. It's the one that you want to see, basically. The next type of opinion is called an except for opinion, and to identify this, you'll see in the auditor's report some language like, you know, this in my opinion, or in our opinion, the financial statements present a, you know, fairly, except for ABC, and it'll outline some specific things. It may be somewhere that the auditor wasn't able to obtain enough evidence. That can happen certainly in the pandemic. Or it may be somewhere that the auditor had a different opinion about a particular judgment, one of those estimates there, where maybe they thought that, you know, they had a different view than management. So those are really important to watch out for. And those will, if you do see that in an auditor's report, that's a really important signal, and you'd want to be understanding exactly what that means, whether it is a difference of opinion or it's just somewhere that the auditor was unable, say, to access a particular part of the operation. And finally, you have a disclaimer opinion or an adverse opinion. And these types of opinion, unlike the other where it's really limited to a specific area, this is talking about overall throwing some significant doubt over, or actually saying specifically that you can't rely on these financial statements. So the disclaimer is where the auditor is basically just unable to get enough evidence in order to form an opinion. And of course, that's something that we'll probably see more of this year. Hopefully not too frequently, but in a pandemic, you can imagine some areas, whether it's to do with valuations or, again, attending sites, particularly internationally, could lead to the auditor not being able to obtain enough evidence to be able to conclude. And the adverse opinion is where, in the auditor's view, something that's pervasive in the financial statements is in their opinion, not right, basically, to put it in plain language. So if you see that adverse opinion that basically says you can't rely on the financial statements, that's a really important red flag. And those are quite rare. And I would not imagine that will be more prevalent necessarily in the current circumstances. Now, the second thing on this slide, the material uncertainty related to going concern, is something you likely will see a lot more of in the circumstances that we're in at the moment because of the economic uncertainty. Let me start with just a brief recap on what going concern means. Going concern is a basis of accounting. It means that you're making estimates in the financial statements based on the assumption that the entity will be able to continue for the foreseeable future, or the company will be able to continue for the foreseeable future. Important to distinguish that this is not a prediction. This is not the auditor saying, in my prediction, the company will continue. It's basically saying that, you know, the plans of the entity, of management, and the ability is there for the company to continue for, you know, and normally looking at the next 12 months, as, you know, distinct from a situation where there's a clear plan for management to wind up the company, let's say in the month after the end of the year, or where it really has no ability except to do that, possibly because it's become insolvent or because of the challenges in the pandemic. Now, you can imagine that the uncertain business conditions mean a lot more entities will be experiencing uncertainty as to their ability to continue for the next 12 months. And there could be major factors, you know, that are coming in, whether that's demand for products, the ability for the companies to, you know, do business as per usual, or even access supplies during the pandemic. So where you see a paragraph in the auditor's report that refers to material uncertainty related to going concern, firstly, that's not a qualification. That's not related to the opinion of the auditor, so that's still fine. They still could be giving a completely unqualified or clean audit opinion. What that means is that you need to look at the financial statements in a note where the directors will have set out the nature of that material uncertainty. So what the auditor is basically saying is, I've given you my opinion, and I really think you should go and read this specific part of the financial statements to understand what's going on in respect of the company's future. And you'll likely see in that note a description of the circumstances that's creating that uncertainty, and then a description of how the company is able to continue despite the uncertainty. Because of course, if the company was not a going concern or not able or planning to continue, their financial statements would not be prepared on that basis. Instead, you'd see financial statements prepared on what's called a liquidation basis, where everything would be valued as if it was going to be sold. So that's one of the things that you're very likely to see in more financial statements during this year, just given the uncertainty, but somewhere that's really important and valuable to be able to get an understanding of the situation that the company's in. The next place that you can look is the key audit matters. And this is something that was introduced into auditors' reports just a few years ago. In fact, the International Auditing Standards Board is right now undertaking a post-implementation review of this new part of the auditor's report. It's basically where the auditor sets out the most challenging things or the highest risks that they face during their audit. And once again, it's not talking about an assessment of the company necessarily. It's about where they spent the most time in the audit, which of course is very useful to be able to understand what's going on in the company. So as an example, you might see a key audit, we very likely will see a key audit matter in the auditor's report that talks about those issues where the most judgment and estimation uncertainty was involved. This might be, certain intangible assets, or it could be, a property portfolio that the company owns. Could be anything, but it's the bit where the auditor spent the most time and believed in it. Well, in their view, was where the most risk was involved in the audit. And so it's a very useful place to look so that you can then understand that as you go through and start to read the rest of the financial statements for yourself. Then when you see that inventory valuation or that property valuation or whatever it might be, or the revenue recognition, you'll be able to say, well, yeah, this was somewhere that the auditor had spent significant time to be able to get comfort around it. Once again, it's very important to recognize that while something may be in a key audit matter, it's not meaning that that's a qualification of the auditor's report. So the auditor ultimately would put something in there where they've been able to get enough comfort to provide a clean opinion on the financial statements. If not, you would see those issues outlined in an except for qualified, or again a disclaimer or adverse qualified opinion right up the top of the auditor's report. The final thing I'm going to touch on is the emphasis of matter paragraph, and that sounds like a heavy term, maybe even a medical term, but it's really just another paragraph similar to the paragraph around going concern, where the auditor is flagging something that in their view is really fundamental to someone reading the financial statements. They need to make sure that they actually do note whatever it is that paragraph is pointing to. So it may point to particular notes in the financial statements or things that may not immediately jump out at you. But if you do see one of those emphasis of matter paragraphs, then certainly my recommendation would be it's very important to go and actually read the applicable place in the applicable note or whatever it is in the financial statements because as you can imagine, there's a lot of thought that goes into and time what the auditor would actually flag in one of those emphasis of matter paragraphs. So you can be certain that it's something very important for you to take a look at if it has been flagged like that. Now, as I promised, whistle stop tour, and I'm going to leave it there. But you can actually see on our website, Chartered Accountants Australia, New Zealand, a document that we've recently produced called Navigating Auditors' Reports in a Pandemic, or you could Google that. And it goes through what I've just outlined with some examples and pointers that you could have a look at as you start getting those auditors' reports coming out for 2020. So I'll leave it there and see if there are any questions.
Thank you, Amir. That was great. So we do have a couple of questions. The first question is, the auditors of German company Wirecard did not pick up that a $2 billion cash balance in the balance sheet was in fact fraudulent. This would seem to be a massive omission in terms of certifying on whether the accounts were materially correct. In this case, there was an error that was way beyond just a material error. How is the auditing profession reacting to this and altering their approach to audits?
Yeah, it's a really important question, and certainly one of the hardest things for auditors to do is to identify where there's been fraud. And I think there's been a lot of debate around this internationally, not just after Wirecard, but also after corporate collapses that have happened in the UK over the last number of years. We have a parliamentary inquiry in Australia, which has touched on auditors' role with respect to identifying fraud. And right now, actually, Chartered Accountants in New Zealand our organisation is looking at, even in the absence of any type of external pressure or inquiry, we are doing a lot of stakeholder outreach with auditors, investors and regulators and standard setters, looking at proactively what steps can be taken for that aspect of the role to evolve. Now, you can imagine it's the answer I'm going to give. It's not a cop-out. Very hard for me to comment specifically on the circumstances of Wirecard. I think that there's not a whole lot of information available there. Partly because it's still an open legal matter in Germany, and the privacy rules over there mean that there is very little information that's sort of come out so far, except to point to, as you rightly have recognised in the question, that it's quite a very significant amount of money that appears to have been involved in quite a complex fraud that went right to the highest levels in the organization. Now, I think when it comes to what can be done to improve, the work of auditors in respect to identifying that type of fraud, I think you've got to say from the outset, that there'll never be a perfect strike rate, particularly when there is collusion at a very high level in organizations. But there are a couple of things that can be done and need to be done so that auditors are constantly keeping up with, I guess, with the crooks and where frauds are becoming more complex and sophisticated. The two things that we're very focused on in the proactive plan that we're working on in New Zealand and that we actually put forward to the Parliament in that inquiry in Australia is, firstly, the training for auditors to be able to identify the signs of fraud and around the types of frauds that are taking place. We're working with partners internationally on some case study based training and also up-to-date sort of databases of the frauds that are occurring or being identified, to make sure that auditors are equipped with or armed with the knowledge and training that if the signs are there, they're able to identify that. But in saying that, it can't really be auditors alone that will be able to stop a fraud like that taking place. And so one of the other important aspects, and this is what came in the United States after the major fraud cases in the early 2000s is strengthening the internal control structure within organizations. And my colleagues in Germany at the German accountancy body for auditors did identify one of the key issues in this case was a lack of governance and internal control, where it's very hard to identify a fraud that's taking place if you don't have that. And so the type of approach that's being taken in the US now has actually had a demonstrable impact on reducing fraud, or at least where fraud occurs, making the boundaries there that it's much more clear who's culpable and how it occurred and how it can be stopped from happening again. And so we see internal control and a role for auditors specifically looking at that outside of just the work that's done on the financial statements as really key. And then I guess finally I should say it's not just us. The profession internationally and standard setters and regulators are really focused on this. Just a few weeks ago, the International Auditing and Assurance Standards Board released quite a significant consultation document that's focused on fraud and going concern, and that's something that opens up, really changing the game on the role that auditors play in that regard. And so I think it's fair to say that things are going to be changing quite significantly in the coming years in regards to that particular issue.
Thank you, Amir. Look, that was really, really great. And in the interest of keeping to time, we're probably going to have to move on to the next speaker, but there were a few more questions for you, so we'll make sure that those get to you after this event. But thank you for your time. We appreciate it.
Pleasure. Okay, thank you.
Thank you. Okay, so we're going to move on to Richard Rookes, who's the CEO of MHM Automation.
Thank you, and thanks to everybody for taking part in this today. Thank you to the NZX. I think that should be shared there now. So Richard Rookes is my name. I'm the CEO of MHM Automation. We have just recently rebranded from Mercer Group was the name, and so we have just rebranded in the past 2 months, and the reason for that was that, as the slide says there, the future for us does look different. So MHM Automation was previously known as Mercer Group, and we've been listed for a long time, been through a number of sort of iterations over the years, I guess. But we're now, over the past 5 years, we've been changing a lot, and we're now a company that designs and supplies automated systems that go into global food processing and logistics sectors. And so we felt that it was time that we rebranded to have a name that better reflected who we are and where we're going. So what we are today is we're a company headquartered in Christchurch. We have offices and workshops in Hastings, Auckland, Brisbane, and in Green Bay, Wisconsin. And in the financial year just finished, 30 June, we grew our revenues by 35% to just over $50 million, and we more than doubled our EBITDA to 2.4 million, which was sort of a return to sustainable profitability for us after a number of pretty tough years. Just in terms of who we are and how we're held, we were controlled over 50% by the Rolston family. That's now changed, and they are a cornerstone shareholder at 32%, and we've had a new shareholder called Colin Neal come on at just under 20%. So just to give a little bit more overview there on what we've done in the past financial year, I think the biggest change really, and I'll come on to it in a second, is the fact the automation side of our business has grown significantly to be a major, well, the driving force of the business these days. We returned to profit, so we made an after-tax profit of just shy of $1 million. and we've reduced net debt down to 1.27 million. And just for some context, that was up at over sort of 10 million 4 or 5 years ago. Just in terms of our balance sheet, just at a very high level, we also own our properties in Christchurch and New Plymouth, so they've been a decent asset over the years for us. This slide here, just wanted to show this because I guess that this shows the evolution of us as a group. You can see, firstly, there's been some pretty significant revenue growth in the past 2 years, and that has been driven, as you can see there, by the growth of our automation business. And how that's happened for us really is through 2 key acquisitions, one of a company called Hayden & Customs in Hastings, and one of the chilling and freezing business of Milmet, which we settled on just about 18 months ago. So the reason we're heading in that automation direction is that as sort of a mega trend globally, we can design and supply systems and export them all around the world, and the drivers of automation are pretty well known, but we see it in all of our customers, and that is the scarcity of labour and ageing populations in Western economies, and that's really, that's really only heading one way. And coupled with that is the increasing cost of labour and then health and safety and food safety issues, all really related to people. And then there's obviously the food and product quality issues that you can have or generate through automation. So in terms of our growth and where we generate our sales, what you can see on this slide is that we are very much an export-focused business. 45% of our revenue in the 19 year was generated out of Australia and New Zealand. It's now down to, that increased, I should say, to 65% last year, but that is really mainly out of Australia. So New Zealand now for us is about 20-25% of what we do. The US remains a big market for us. We've got some issues there at the moment with COVID, but we've just recently signed up a distributor for us over there called Scan American Corp, which should see those sales drive ahead. So the focus of us as a group is to try and generate some diversification in what we're doing at the product level and the sectors in which we're selling to and in the geographies in which we're selling to. What we've seen with a business like ours is that if you're too focused on one specific niche area, you tend to have large waves of capital investment with our customers, which means that you can go from feast to famine. And what we're very focused on is ensuring that we get away from that volatility in our revenue line, because that obviously leads to profitability issues. We're looking to consolidate our position in our core market. So we focus on selling products and designing solutions where we can be in the top 3 of that niche market globally. In that market, we are definitely there. We are the world leader in the reverse packaging and the cheese converting sector. That's a relatively niche sector, but it is large in the US, and it's also a decent scale in Australia. I'll come on a bit further to that as we go through. And then we're also a world leader in plate freezing technology and cheese cooling technology. We're looking to enter new markets where we can take our existing technologies and take them into new markets. So the key areas that we're doing that in at the moment are in that we're taking our chilling and freezing technology into the US red meat industry, and we're also taking our reverse packaging technology into that same industry. And we've recently sold our first system into one of the largest meat companies globally in the US. So we're expecting that to continue to drive that diversification based off an existing technology that we already have. We've also re-entered the New Zealand horticulture sector. It's pretty well publicised across the country that they need to automate their processes, and we've been doing a lot in that space. And one sort of large deal that we've been working on recently, or one project that we've been working on, is we've developed apple tube filling machines for rocket apples. So that's a good example where we're using our automation capability, our robotics capability, to help a key New Zealand exporter become more efficient. So just going into a little bit more detail on what our products are and what we do. As I said, we are a world leader in reverse packaging. And what reverse packaging really means is that we take materials out of bulk packaging. And that really was developed as a process for the preparation of bulk cheese for further processing. You can see on that slide there, that's a 20 kg block of cheese that we effectively take out of that box, take out of a bag inside that, and get it ready to go into further processing. As I said earlier, we are taking that technology now into other sectors. We're taking it into the red meat sector, where we've already sold our first system, and we're looking to expand that. And we're also designing systems now that will be able to go into the online fulfillment sectors, where again there's increasing demand for fulfillment centres where product comes in, needs to be depackaged, and we take manual handling out of that. So we have 28 of these systems installed across Australia and the USA in the cheese sector. And as I said, we're looking to take that further into other sectors such as logistics, pharmaceutical, and pet food. Really, it's anywhere where bulk product comes in and needs to be depackaged before it goes out again. So the chilling and freezing side of the business, we bought the Milmec chilling and freezing business 18 months ago. As I said, Milmec is a true global leader in the large-scale chilling and freezing. Has more than 250 systems installed around the world. It has a particularly strong presence in the Australian red meat sector and in the global cheese sector. So, and that business, since we bought it, has had a wonderful run of sales, and that's looking to continue as we go forward with a very strong pipeline. And one of the other benefits of that has been the fact that we've been able to use the agency automation capability to add on at the front and back end of the Milmec systems. As I said, yeah, it's the same drivers for the Milmec chilling and freezing systems. It's the automation of a process that historically has been very manual. But the other key benefit of this is the food safety part to it, where we can guarantee the times and the speed in which we can get product down to temperature. So the Milmec acquisition, undertaken 18 months ago, has been a very successful acquisition for us, and it continues to go well. Just thought I'd quickly touch on the stainless solution side of our business. It's the historical core business of the Mercer Group. Now forms still a key part of our business, and it effectively designs and supplies large stainless equipment that goes into the New Zealand dairy, wine, and food sectors. As you would have seen from our financials at the start of the presentation, that side of our business has been reducing. It is a competitive space, and the number of large projects going into the dairy sector have been reducing over the past couple of years. So that for us has been partially offset by the fact that the fabrication capability that we have within our sites, being Christchurch and Hastings, can manufacture for the Milmec side of the business. So we're seeing some great benefits there. So the other part of our business that we have which is somewhat different to the rest of it, albeit still a technology, is a medical sterilisation technology that we're looking to commercialise. It's a patented system that Mercer holds the patents of, and it is effectively a new sterilisation process for hospitals. And we've been working on this for a number of years now, and we continue to invest in it and work on it. It's a very exciting technology because it brings some serious benefits to the hospital sector, and that is it turns around the sterilisation in sub 20 minutes versus an hour for the existing process. It's more energy efficient. It's undertaken in a non-porous container, whereas the existing process is porous and therefore inherently less safe than having a porous container. I mean, a non-porous container, I should say. And then our system is better for storage and transport. So those that have followed us as a company over the years will know that we've been talking about the S-Clave for a long time. And you know, it continues to be close. We have partnered with Atherton, who are a leading sterilisation company in Australia. They have a very large market share over there. And we are in the theoretical final stages of development of this project. And there have been some technical challenges over the past 12 months with the lidding of the container, but we're confident that is just a commercialisation issue rather than a issue that means that the product doesn't work. So we are still targeting having an S-Clave system in a hospital in the 2021 financial year, which is through to June next year. And you know, if we can get it there, then the upside is potentially significant because it's a very large market, and our solution is better than the existing sterilisation process. So just quickly, conscious of time, on the outlook for us, we do see a continuation of our increasing profitability in this year. We've got very good workflows today, and we're well over 50% sold for the financial year already, and we've got a strong pipeline of good work that we expect to close in the short term, which will lock in sort of those improving financial performance. There is still a lot of work to do internally and externally on the new branding. We've got to make sure that we get that message out, and we're also internally looking to build as one group, so that instead of operating separate standalone companies as we have been to today, we'll be in the market as one group, being able to more effectively cross-sell our capability in the market, whilst internally being able to manufacture and deliver those projects and products more effectively and efficiently. So just to sum up, really, we very much have changed from a stainless steel fabrication business to an automation business. We have a really strong portfolio in the automation space that delivers great systems, designs great systems into the food processing and packaging industries globally. And one of the really big things about that is that we have a really strong reputation with our existing customers, which means that we can go to them with other services and products now, that we have a greater breadth, then it makes that additional sale easier. So look, we're pretty confident that our outlook is good, and I guess the only other point is that we are always on the hunt for more acquisitions that fit with where we're heading strategically. So that's it, and I will open it up for questions.
Thank you very much, Richard. We do have quite a few questions for you, and just very conscious of time, so we'll do one and then we'll make sure we get the rest to you offline. So one question is, what is the competitive landscape like in robotics and automation at the moment?
Look, that's a good question, because oftentimes you see that people see a robot and think that that's a competitive advantage in itself. It is a competitive space, and that's why I say that we're very focused on our products and services where we can be in the top 3 globally. It all comes down to your solution, and that needs to meet a price point for the customer so that they can generate a return on investment on that. So we tend to stay away from what we would consider to be the more commoditized end of automation, which is conveying systems and just simple end-of-line palletizing solutions, because that's where it's quite hard to differentiate yourself, and you've got to go for a very low-cost model. So what we're focused on is that's why we talk about design and supply. We're very focused on the design of systems where our key piece of IP in that system is in the best 3, in the top 3 globally. And at that point, and when you can start putting together a full system like that, you can generate greater scale and greater margin by doing the entire system. So I think that I would say that you need to have specialist products and services, and being able to have an innovative approach to make sure that you stay ahead of the competition.
Great, thank you very much. Thank you for the presentation, and we'll make sure we get the rest of the questions to you after this. So now we'll jump over to David Mair, who is the CEO of Skellerup.
Good afternoon. Sorry, just give me a second to... Okay, I have a relatively short presentation. So first of all, to remind everyone, the fiscal year for Skellerup ends on the 30th of June each year, so 1st of July to 30th of June. So of course, we've just completed our full annual result, and that's been out on the market for a while. But today I'd like to talk about why I think Skellerup's a good business and becoming a great business. First of all, we have a number of diverse growth opportunities. 80% round figures of our revenue is generated overseas, and we've had a focus on the US market as probably the greatest opportunity on both sides of the business. So Skellerup is essentially in 2 kinds of areas. One is the agri division, which develops food safety, food grade products used mainly in dairy milking, and that's backed up by the protein drive that's come out of places like China, for example, for infant formula. And then on the industrial side, very much it's around safe water, so it's keeping good water in, potable water in, keeping bad water in, and protected away from good water sources, so it keeps good water in, bad water out, or keeps bad water from contaminating other things. And we've driven the business quite hard over the last 5 years, focusing on those 2 things, but fundamentally it comes down to safe food, safe water. So how do we do that? Well, we have a group of long relationships. They're called OEMs, so original equipment manufacturers, and we tend to provide the essential critical component of a larger system. So for example, we supply on the agri side the essential milking liners used to milk cows. We don't do the stainless, unlike Richard and some of the other people that provide the stainless. We don't do that. We just ensure that from the time the milk comes out of the cow, it passes through a number of processes. We make sure that the food safety aspects are considered. So that's an example from the agri. And the water from the reservoir all the way through to your shower, and while you're singing in the shower, if you happen to open your mouth and swallow some water, we want to make sure that you don't end up with some bacterial infection or something like that. So the way we do that is we provide the seals that ensure potable water quality. So the way we do that is we work with a very narrow range of materials, and we have very deep knowledge about rubber, about silicone and other polymers, but also plastics, engineered plastics. So not commodity type plastics, but engineered plastics. And our skill set is to combine those into creating new products. So a lot of our development work is actually for a product that doesn't exist. We don't generally compete trying to make something that already some other companies provides. And an interesting thing about that process of development, many people see Skellerup as a manufacturer, and of course they think about red band gumboots, which I'll come to later. But in reality, a lot of the work that we do is about the design element of a new product or a new system. And in doing that, as I said, one of the interesting things is on a scalable manufacturing process, 80% of the cost structure is set up at the design. So I believe the greatest value for Skellerup is created in the design process. And we've spent quite a bit of time over the last 5 years not only reinforcing that process, but speeding it up. So we've reduced our development time down from, on average, 2 years down to less than 6 months. And of course, that is a competitive advantage for us. Just in terms of why is Skellerup a good business? I mean, I'm a professional investor. I've always been interested in shares and things like that. I look for businesses that have strong, sustainable cash flows. So I look really, really hard at cash. So how did we go this last year up to the 30th of June 2020? We repeated the record result at the NPAT level, at the net profit after tax level, which I think is fantastic. Of course, we have an operation in China, we have an operation in Vietnam, we have operation in Italy, the UK, we have 3 operations, we have Australia, of course, New Zealand, the US. So we saw the COVID impacts coming, and we saw those really at the end of January starting in China, and we've learned from that and implemented a number of health and safety really smart ideas, and we managed to capture most of those by the time it became a real issue in New Zealand, which is great. So I'm really pleased for the way the team has responded worldwide, and so as part of that, we ended up with a very good result, as it turned out. And I think Skellerup is known for paying a very good dividend, and as interest rates inevitably lower, it looks like they're going to be low for a while longer, the yield on the dividend is very good, which gives, of course, investors choice. So just a few thoughts from our result. First, we had a record operating cash flow of 48 million in FY20. Our debt is only 10% of the total assets. We have the agility and the ability to make strategic acquisitions. We've only done relatively small ones. It's not that we don't want to do a bigger one, of course we would, but we tend to do acquisitions that are very aligned to our strategy along the lines that Richard was saying earlier. You've got to stay close to your knitting. So we're not looking at just buying a business. We want to buy a business that accelerates our entry into a section of the market that we're interested in. We've proven that we can withstand shocks, and not only the COVID thing, but we had the earthquakes, which affected our large operation in Christchurch, which supplies dairy rubberware, not only to the New Zealand market, but around the world. And again, we were reminded during the COVID thing that we really had to spend some time and effort actually doing physical distancing and things like that. But despite that, we've been able to maintain a strong cash flow and pay good dividends to shareholders. And I often refer to our business as a low cap model, despite the large amount we invested in Christchurch to sort of rebuild what was at Woolston, 20 buildings into one and things like that, and I'm delighted with the result that it's turned out. Other than that, the model is very much that the OEM customers pay for development. So the way we don't have contracts with OEM customers, what we do is we encourage them to pay a development fee, and that means that we don't have to contribute so much capital. On the industrial side, we do quite a bit of manufacturing out of Vietnam and China. The Vietnam operation is a contract manufacturer in that sense, but we control the quality and the inputs and outputs. So on to the next slide. So what has changed at Skellerup? I think we've always had a strong customer focus, but we're starting to now drive through some of the operational improvements that we expected to get from the investment in the new Wigram facility. And we've started to focus on where we can reduce waste around the sites around the world. And when I say waste, I mean waste along the lines of the Japanese view as muda, so waste in process, not just physical waste in that sense. Of course, both are important. I talked about the kind of enhanced and faster capability we have on product development in particular, and our expertise has led us down the path that liquid silicone and heat-cured silicone rubber are technologies of the future, and black rubber is probably not going to be as important. Having said that, like most materials, they have their uses, so it's not like black rubber is going to end, it's just that there's a trend towards using more silicone products, particularly for medical applications. One of the things we worked very hard on in the last 5 years, we used to have some very big one-off sort of wins or losses. So we were involved very much in the mining industry in providing what's called our FlexiFlow product, but also with oil and gas oil and gas products and mining products. And what we've done is we've turned that very much more into critical components and things like showers. So some of our key customers, for example, are Moen. So Moen's the largest tapware business in the US. Kohler, you may have heard of Kohler, the shower company. We deal with GEA, DeLaval on the agri side. So we tend to deal with very large OEMs. And the good news is they're very strong in their markets and they can afford to pay. So we don't seem to have the same issues around cash flow and getting paid as maybe some other companies are facing at the moment. But look, overall, I think the key thing is we've strengthened the team. So the senior leadership team has been developed and we now have strong growth prospects going forward. So just so everyone's clear, we pay our dividend this year. The final dividend is paid on the 16th of October. It's for those shareholders on record as of Friday this week. And the dividend is 13 cents per share. So you can work out the yield is depending on whether you're thinking gross or net, it's still over 4.5%, 5%, whatever. So from my point of view as an investor, I think that's a good business. Just a quick reminder of, I've talked about this and I'm conscious of the time. So essentially we build strong and deep customer relationships. We get asked to help them with their new product development. We focus on critical components that are an essential element of a much more complex system. We have a lot of intellectual know-how about the materials, but also how to manufacture from the materials, but the emphasis is very much on the technical teams up front. We have more product opportunities than we can deal with, which is always a great position to be in, and that will drive revenue and earnings growth. And of course, we're looking at acquisitions, and of course, in this climate now, a lot more opportunities are coming our way. So finally, just a couple of thoughts. There's some pictures. Of course, there's a red pan gumboot there. That's what most people think about Skellerup. To be honest, that's less than 5% of our total business. But the rest of it around milking, firefighting boots, specialist equipment, we're a large part of that worldwide, the milking process and ensuring safe food. And then on the industrial side, we have a minor thing on foam and things like that, but you can see the water processes there all the way through to the kitchen. And so those are some examples of actually what we do. So I think in this, just from a time point of view, I'll stop there and welcome questions.
Thank you very much, David. We do have a few questions for you. So the first question is, have China and US trade tensions impacted your supply chain? If so, how have you managed that situation?
Carefully is probably the answer. So of course, we manufacture some products in China and they go to the US. It's mainly our rotary vane vacuum pumps. And we had a very severe tariff imposed. So the first thing you do when that happens is you look at, can you increase your prices? We sell at a premium to the two competitors who happen to be domestically based in the US. So the answer is that we couldn't easily recover it from pricing. The other thing we knew from trying to acquire one of those two competitors, even with the 25% tariff, we were still more cost effective than them. And so we thought about our transfer pricing and things like that. But practically, interestingly, the other side of that is for Moen. I mentioned Moen earlier, the largest tapware company. Their biggest growth market is China. So they're a US. So in US they're growing 30%, in China they're growing 70% a year, and we're in a great position to facilitate that. So just strictly from a supply chain point of view, I haven't seen a lot of issues. From an end user demand, that's where the challenge is going to come over the next 2 years, in my view. But other than that, these are challenges that all experienced international business people deal with. Good question, though.
Yes, thank you. And we probably got time for one more question, but there were more. You mentioned acquisitions and new markets. What do you look for in deciding whether an opportunity is likely to bring success?
What do I look for in terms of a success? Well, the first thing is it's got to be aligned to our strategy. So we acquired a company in the UK recently as an example. It makes silicon tubing. So most rubber tubing for milking is black rubber. We looked around the world and found three top companies out of about 13 we examined. We bought their product, we tested it. And interestingly, that was 3 hours away from our biggest competitor, Avon Milkrite, which again, interestingly, has just been acquired by D. Lavelle. So to us, once we'd identified that was the best company and they had the best technology for doing silicon tubing, we wanted to get in there. But what made that successful? First, we moved very quickly. We actually did the deal in less than a month. It's not about the speed of the deal, but the manager that they had there was a very competent manager, and since then the acquisition has gone extremely well. But I think the first thing is, before you worry about acquisitions and being successful, you've got to decide how it fits with your business and can you scale it. The second reason it's very successful is our biggest dairy customer worldwide, GEA, had several suppliers in the US, and then one of their silicon tubing suppliers went feral, and we saw an immediate fit. The company we acquired, Silclear, was not supplying GEA USA. We have the key connection. They're our key OEM, as I said. So you can start to see how that works. And the other thing is, I think we paid fair money for a good company, a very good company. Again, good question.
Great. Well, thank you so much. I'd like to thank all of the presenters, Amir, Richard and David, for giving their time today, and also everyone that joined us. Great to have everyone on this digital forum, and we really hope that you'll join each month as we have different companies coming through. So if your questions weren't answered, please do come through on email and we'll make sure that they get to the right places. And we'll make sure that the presentations are available as well if people are interested in those. So we wish everyone a very good afternoon and thank you again.